Good morning and welcome to the Coinbase Institutional Markets Call. It's Tuesday, the 19th of September, and after a slightly quieter week, we have everyone back from the various conferences around the world. We had Token 49 in Singapore, we had Permissionless in Austin, Texas. A lot of people were out and about. David, nice to have you back. I know you're still struggling from a bit of jet lag. How are you feeling? How were the food markets, which we were speculating as to whether or not you might check out in Singapore?
No, thanks a lot, Ben. I love speculating about food markets. It was really good vibe overall. I'm happy to talk about it.
Amazing. And how's that jet lag? You do have 2 young children, so I appreciate jet lag is probably, you get that the entire time, but you feeling all right?
I'm used to not sleeping in general, so I think that this is more or less just an extension of that.
Okay, good. Well, hopefully you can find some time, some power naps at some point through the week. We are also joined by Greg, Josh, and Sid this week. As I said, we're pretty light news-wise, but we're going to run through Token 49 with David. We're going to run through FOMC and dot plot later this week. Eigenlayer data availability with Sid. We're also going to check in on friend.tech, see if that is still growing. And then we're going to keep on hammering this home, but I think it's really important, just reminding everyone on the dates around the potential ETFs in the US and other things to keep an eye on. It feels like they're kind of the big things that are going to potentially move the market going forward. So we want to make sure that we're on top of those. Some quick housekeeping. Please don't forget to like and subscribe. If you're a Coinbase employee and you haven't liked and subscribed, we are thoroughly upset with you. So please do. That helps the show become more well-known and others can hear about it. And the team put a lot of work into it, so we'd love people to do that. And then if you're watching on YouTube, you can scan the QR code to access all of David and the team's fantastic research. If you're listening on podcast, we'll add all of those links, as well as any of the links that we talk about to the show notes, so please don't forget to check those out. But without further ado, Josh, let's bring you in. What is going on in the markets over the last 7 days or so?
Yeah, thanks, Ben. Happy mid-September to everyone, and we hope those, including our David, who have had far and wide conference travels, are fighting their jet lag well. In a typically tough September month for crypto, we're seeing assets bucking its recent trend with some slight gains midway through the month, with BTC up 4.4% and ETH near unchanged month to date. If you do believe in the predictive nature of seasonal trends, here's to hoping that we can just make it to October, where greener skies should hopefully await, with the average 5-year return running at 16.6%, for instance, in BTC and 12% for ETH. Kicking it off with the majors, though, BTC and ETH are trading higher on the week. While we are seeing some decent pops in the market, a narrative I'm watching is the idea that sellers are out there active and waiting on the offer side, looking to take advantage of any small pops in price, which obviously could serve as a headwind for assets in the near term. We saw this really evidenced yesterday and today, with BTC climbing north of 27,300, only for it to be smacked back down to 26,800 mid-morning. ETH touching, I think, like 1665 before finding its footing somewhere near the 1640s. In the scheme of things, I think this performance is actually quite good, though, given that there are still sentiment-sensitive headlines on the horizon, which have been well flagged here, including the sell flow by the FTX estate, as well as Mt. Gox repayments, amongst other things. So I think there are still sellers in this market who have enjoyed nice gains year to date, and could ultimately be looking to rotate and reposition their books into other assets heading into the end of the year, especially as unique liquidity opportunities arise. Positioning-wise, on the back of BTC's move higher yesterday, perp open interest actually shot up $800 million, near its August 29th high of $8.9 billion. I think there's been a lot of speculation why, but perhaps this is due to some traders betting that tomorrow's FOMC meeting could yield a positive surprise. Still, all eyes are laser focused on Wednesday's updated dots, which I'm sure David will touch more about in a bit. In ETH news, a year after the merge, CoinDesk reported that net supply is down nearly 300,000 units. But even given these fundamentals of ETH as a deflationary asset on the year, ETH has still underperformed BTC by nearly 19% year to date. But perhaps in a sign of things later to come this year, as Crypto Twitter noted yesterday, there were some interesting option activity over the weekend, with a whale buying nearly $150 million in ETH calls, with what appears to be about 40,000 contracts expiring in December and 50,000 contracts with the 2,000 strike expiring in October. And while I haven't found a credible enough source to verify the open interest figures for these strike levels prior to the trade, if the rumor is true, it looks like there are some bullish bets in ETH heading into the end of the year. Lastly, to round us out with some headlines and fundraising news, Blockchain Capital is set to launch 2 new funds for a total of $580 million. Who said anything about us being in a bear market? The fund is set to include both strategic LPs such as Visa and PayPal and longer-term capital comprised of traditional pools of funds such as sovereign wealth and university endowments. Citi is also set to launch Citi Token Services, its token service offering, which will allow customers to convert deposits into digital tokens on Citi's private blockchain. Really interesting here, I think Bloomberg reported on a very tangible use case that Citi sees, which is for trade finance. And lastly, yesterday, the NYDFS released its updated proposed guidelines and updated its green list tokens, which allow licensees to ultimately list or custody without further regulatory hurdles. BTC and ETH, obviously on that list, notably Ripple, Doge, and Litecoin were excluded, though there was very little market reaction to this news. So really to close out, as a general comment, it has felt like a much quieter activity week with very few major market movers, perhaps due to the many conferences that you alluded to earlier. And the reports that I've seen thus far have made it sound like, everybody really enjoyed what they saw. So with that, back to you, Ben.
Cool, thanks, Josh. Also worth noting, Josh, you're also probably quite short on sleep, given you have a newborn. So you're doing great, and I hope you are getting a few extra hours here and there. So it's interesting what you mentioned about the ETH options trade. That is definitely a decent size. Greg, would love to bring you in here as our resident options expert. When looking at that a little bit more closely, what are some of the dynamics that could be going on behind the scenes there?
Yeah, so it's obviously a very big trade. The important thing to look at is whether it was to open, meaning it's a new trade and would increase the open interest, or is it to close, meaning it decreased the open interest. In this trade, this was to close. So someone had sold these options and it was now going to buy them back. Now, we've talked about it before on this call. There is rumors of a large ETH overwriter out of the APAC region. So it's likely that he or she sold these a while back, looking to generate some yield, and has now come to close that position and reduce their risk.
Interesting. So one to keep an eye on, and I guess keep an eye on the open interest, as you said, to see how that might change going forwards. Perfect. Token 49. Let's move to there next. David, we'd love to bring you in. Josh rightly mentioned that a lot of people were out last week, and it was a little bit quieter as a result. How did you find it? What were some of the key takeaways or things that investors were asking you most when you were there?
Yeah, I would say that, because we were Coinbase, a lot of clients were asking us about layer 2s and Base in particular. But that was kind of more specific to us. We were hosting a Coinbase house while we were there as well. And we were promoting our Prime Web3 wallet, which also had just been released. But besides that, I feel like a lot of clients were talking about a lot of the topics we've been discussing on this podcast. Number one, like tokenization, for example, just that whole subject was huge. A lot of people talking about what to do in terms of how that affects other asset classes. A lot of people interested in regulatory clarity in the US, which kind of told me that a lot of regions still kind of look to the US to kind of set the tone for things, even though it feels like a lot of regions are progressing beyond what's happening in the US. What would be the potential impact of Bitcoin spot ETFs, for example? And also, a lot of people talking about how do we get institutions to really understand and use DeFi, given that a lot of people do want to have that efficiency of DeFi, but it's kind of tough to extend a lot of applications of that, given the KYC AML needed by a lot of institutions. And this I didn't get to attend it, but also Sam Altman was there, which I thought was really cool. He was there to talk about generative AI, but also the vision behind WorldCoin and adoption on that side.
Interesting. So you mentioned Coinbase House. I've heard some great things about it. The rumors I heard was that Vitalik was there and was talking to a few people, Olaf, Justin Sun, and various others. Are those rumors correct?
I cannot say. I will say that I found it surprising that Vitalik was at Token 2049, given that he had also made an appearance at Permissionless as well.
Wow, that's some good air miles and some good jet lag. I think. Well done him.
David, I have a question for you. Here in the US, we're obviously so focused on this ETF and will it be approved or not. What was the sentiment in Singapore? Is, the rest of the global crypto industry as focused on a US ETF as we are? Or, is it just not as important to them?
No, I think a lot of people were thinking about it. And it's really from the point of view of liquidity, because I think people realize that it's a bit of a chicken and an egg story, that right now we're not seeing as much of this the ETF getting kind of priced into markets, in part because, I think people still need to see this kind of finalized before we get to see that inflow of liquidity. So I think, people understand that, but they don't understand the nuances of the regulatory situation, what it takes for us to kind of get there. Some were familiar with the timeline, but they don't understand the differences of they're appealing the Grayscale case. What does that mean? How does that kind of inform decision-making as far as concerns surrounding market manipulation, surveillance sharing agreements, and what that does for the SEC's case supporting Bitcoin spot ETFs?
Cool. David, I have one for you as well. So I guess given the physical locations conference, i.e. Asia, what was your take on really regional sentiment for crypto prospects, I guess, in mainland China?
Yeah, I think there were a lot of thoughtful conversations around that. It kind of pertained to what was going on, not just inside of Singapore, but within the region, Hong Kong, all these things. Some people were talking about how Beijing's been backing this kind of digital prototype, the mBridge project, which if you're not familiar with it, basically it's the idea that you could kind of use digital assets to make kind of wholesale payments across borders. So effectively, you could just use it as a way to kind of send money around the world without necessarily relying on U.S. banks and U.S. infrastructure. So people are kind of saying, is this an archetype for Beijing's broader interests in the digital asset space? So I think things like that were very interesting.
Perfect. And David, were there any big surprises? I guess we would have expected to hear about ETFs and regulation and things like that, but was there anything that was slightly shocking or surprising to you over the week?
So I like what people were saying about institutional adoption just in general. There was actually a panel at Token 24/9 called Who is Still Investing in Crypto, which was, it sounded kind of bleak in a lot of ways, but actually I think the reaction was actually pretty positive, because a lot of people were talking about how you still see a lot of resources from institutions mainly being applied to crypto, and maybe some of that still tends to be around tokenization. Like I said, tokenization of real world assets just tend to be just like the biggest topic while we were there. For example, we hosted a session on it. It's probably one of the most well attended ones. But of course, this has other tertiary kind of impacts on how this affects DeFi development. It's affecting how money's pouring into the area. But, Jenny Johnson from Franklin Templeton was there, for example. She hosted a panel talking about crypto and, what the path is ahead for it as an asset class. And she was talking, as we were kind of mentioning before, the Bitcoin spot ETF application. Of course, they just kind of put one out. They were talking about their on-chain money market fund, which is, available on Stellar and Polygon. And they were just kind of talking about the future roadmap. But I think that there's just so much interest around that, because this is also the kind of macro environment we're in a lot of ways. Like yield is, and how to get yield is, just a really big deal, because, stable coins, for example, if a stable coin is kind of paying yield of 5%, a lot of people in Singapore especially are kind of saying, relative to the 3.8% they're getting, that's really attractive. How do we kind of, have such real world asset use cases here that we can bring such, regulated assets like treasuries on chain so that you can get exposure to that? I think that was kind of the biggest topic while I was there.
That's great. It's really good to kind of hear that perspective, actually, because it's so easy to be so US centric and think about where rates are here, and forgetting that crypto is a global movement, and the ability for folks to get like the 2-year equivalent rate via USDC offshore is pretty amazing. Fantastic. So I guess slightly kind of moving into the more kind of TradFi part of maybe your time there, and also kind of referencing the news that Josh mentioned around Citigroup and Nomura and Standard Chartered all doing things in crypto. It feels like there's definitely a lot of people working on DLT if you like, maybe more so than crypto, but positive nonetheless. Does that feel fair?
Yeah, and I think that's a fair reflection of what's going on with the banks in particular. That was a big topic as well, like how not just institutions in general, but like banks in particular are getting involved in this space. But in a lot of ways, it's for like using it as a settlement layer or other things. So it's about efficiency gains rather than doing liquid trading of tokens, for example.
Yeah, that makes a ton of sense. So moving on to macro, thank you for that rundown. Great to kind of get a good sense of what happened, given not everyone could be there. Moving on to the macro, FOMC this week, dot plot, what are we looking out for?
Yeah, I mean, first thing I would kind of say is, yes, the FOMC meeting is coming this week. I mean, we're not expecting very much already. I think the Wall Street Journal had mentioned that it's very likely that the Fed's just going to stay put here. And of course, that news story kind of came before we got the inflation print last week, which came just slightly above expectations. So I still think the most likely outcome is that the Fed's going to stay put here. They're not going to hike. But you see that the market is increasingly putting the chances of a hike in November at a higher probability. But my impression is nothing has really changed. I mean, the biggest thing to watch out for at this meeting is what does the dot plot say? My expectation is that, by the time we roll around into the first quarter, maybe second quarter of 2024, rate cuts are still very likely, and that's because I think the way the economic situation in the U.S. I mean, it's been propped up mainly by fiscal expansion, because we're spending a lot of money on the CHIPS Act, we're spending a lot of money on the Inflation Reduction Act, but you can see the cracks at the sides of this thing. A lot of people think that we're in a Goldilocks situation, but we're kind of not. I mean, delinquencies are up on loans, for example. We're going to start student loan repayments in a few weeks' time. It just doesn't seem that it's easy to get credit these days. And all of that has to do with the Fed. So, I mean, what they're doing is impacting the economy. It's just that because of all the spending the government's been doing, it's very pro-cyclical, which is strange. You don't usually see, we haven't seen this in a very long time. And I think that as a result, the US economy looks like it's doing well, but we've already peaked on labor data. Housing doesn't look that strong to me, or at least not as strong as I think it could be, perhaps. So I think these things matter. But, Greg mentioned this last week, just overall, the impact of macroeconomic factors on crypto performance is a lot more limited these days.
Yeah, it's interesting you kind of talked to next year and potential rate cuts. I was having breakfast with a client this morning, and we were discussing through what the setup for crypto looks like next year with potentially an ETF. You've got the halvening, rate cuts. The setup looks a lot more positive than 22, 23.
Yeah, I agree. I think the first quarter of 2024 is going to be a confluence of factors. And it's going to be a nice setup because in the backdrop, you're going to have this easier monetary environment. And personally, I think that it's going to be that dual expansionary monetary and fiscal policy that's going to work very nicely for Bitcoin, because I think a lot of people are going to look at this and say, yeah, this is not a government that taxes and spends anymore. A lot of this is money printing in order to pay for these things. And ultimately, this is in part what contributes to my view that this is a central bank that needs to ease rates sooner rather than later, because, it's not just about inflation. I mean, yes, that, it has a dual mandate. It wants to maintain full employment, or at least, natural rates of employment. But as a second order concern, it is worried about the debt servicing costs that the U.S. has, for example. That kind of puts Bitcoin in a very strong place, in particular, because people need that alternative to the traditional financial system. And then along the way, you're also going to have this Bitcoin spot ETF, very likely. I mean, I'm speculating, of course, but this is my own opinion. Also, we're probably going to get something. The halving is going to probably be very supportive from people, even though I think there's going to be some challenges for Bitcoin miners if they're not productive or efficient enough. But overall, I think that's going to be a very attractive story.
Yeah, one to look forward to. And I guess if we reflect back to the start of the year, it felt like it was going to be the year of Ethereum. We obviously had various updates which affected the supply, and then we had the ability to unlock staked ETH and things like that. But it's really like kind of underperformed quite a lot through the year. There was an update in the last week or so. Do you want to just run us through that, and maybe we can bring Sid in as well to add any comments he has?
Yeah, this is less an update that impacts Ethereum right now, but I think increasingly people are recognizing that the validator count is getting somewhat too high, which is starting to create real issues for Ethereum's network because this as you increase the number of validators, things become less smooth, less efficient. You get bogged down by potential network effects, for example. I mean, this doesn't create any major problem for liveness now, but it could over the long run. So one of the proposals that's being made for Dencun, or the Cancun fork, is this 7514, which would actually limit the validator churn. So it wouldn't actually limit the number of validators yet, although that is something that people are considering. But what it would do is actually limit the pace at which you are increasing the number of validators in the system. So, right now the churn limit actually determines how many Ethereum validators can enter every epoch, and every epoch is 6.4 minutes. Because of the number of validators that are in there, and you can kind of see from my slide, for example, it increases every 65,000 or so new validators. We're currently up to around 12. They want to bring that down to 8. So if that happens, at least you could have a longer period of time before we reach that, really like top level number of validators that would become a problem for the Ethereum network.
Interesting. And do we give a sense of kind of date that we should be, is there a date that we can put on that we should put in our diaries?
The challenge for this is that this is probably gonna make the take it longer for the Cancun fork to actually be completed. We're not sure how much longer. I think that already expectations were that we could see this not in 2023, but probably in the first quarter of 2024. I don't think this changes that expectation too much, but certainly, other factors kind of will, play a part because, like I said, ultimately, this is just kind of a way to, put a Band-Aid on the situation. I think in the background, people are also having the conversation around, do we need to have a maximum validator cap? What would that entail? Should we actually just increase the ETH that you need from 32 to something like 2048, or what are the other potential solutions here?
Interesting. Okay, cool. Thank you, David. Appreciate you running us through all those things, and we can certainly kind of keep coming back to that as we kind of learn more. Moving on to trade flows, Greg, what have you been keeping an eye on this week?
Yeah, thanks, Ben. So, exchange volumes on average have been pretty steady over the past month or so. The market, as we all know, has been rather choppy over that time. BTC traded up to 28K, sold off all the way down to 25K. Now we're a little north of 27. So just a lot of chop to deal with. I think the fact that we held the $25,000 level in BTC gave some people confidence to add positions. Our flows over the past week have been skewed pretty heavily to the buy side in a lot of the tokens we like to talk about: Bitcoin, Ethereum, Solana, Arbitrum. So we are seeing some people put money to work here. However, I would say that from a momentum standpoint, not much has changed. We're still below, a lot of the longer term moving averages in Bitcoin. And that makes me somewhat cautious. Momentum is what brings people into the market. And without it, new money is likely to stay on the sidelines. And I don't see us, making a sustained break higher, until we get some of the news items that we often like to talk about, like the ETF.
Yeah, that makes a ton of sense. So the chart here and what you just talked through were centralized exchange volumes. There was a narrative at the start of the year around people moving off centralized exchanges onto decentralized. Is that holding true? What are the volumes like on decentralized exchanges?
So yeah, we actually have a chart of that as well. This is monthly volume. So it's a longer term perspective, but you can see, even DeFi exchanges, like Uniswap and Curve, they're seeing volumes fall off as well. And this has a number of impacts. One, liquidity. Also, for those that are providing liquidity and looking to earn those LP yields, yields are down. So again, I wouldn't expect to see these come back too much until we break higher. It's very momentum driven at this point.
And given volumes on the lower side of things, where do you see the opportunities at the moment?
Yeah, so basis is really interesting. Right now, term futures are lining up around 9% annualized, which isn't super attractive. But every so often, they do blow out to say 12, 13, 14%. Front month was that wide yesterday for a period of time and this morning. Another opportunity that we talk about a lot that's still attractive is the GBTC trade. That's widened back out to a 20% discount. Last week it traded as tight as 16%. And basically, again, what a 20% discount means is that the market's assigning about a 65% probability that an ETF gets approved. So, you have to weigh that against, what you think your probability is. And if it's higher, then it may be a trade that you want to look at.
Amazing. And I guess so much of the probability for whether or not these go through is around the ETF timeline and grayscale appeal and things like that. Can you just run us through, and I'm sorry, we're going to do this probably every week for the next few weeks now, or longer, as long as it takes, but can you just run us through what the important dates are for us all to keep track on?
Yeah, absolutely. So October 13th is when the SEC needs to let us know, or let the courts know, if they're planning to appeal the ruling, the grayscale ruling. And then a few days after that, we basically get round 2 of the ETF applications. And they can either then approve the ETF applications or defer these to a later date. But nevertheless, mid-October, from October 13th to October 16th, is going to be a very important time for the market.
Awesome. And is it fair to say that if we get more news out, or as we get closer to some of these dates, potentially some of those discounts on Grayscale BTC or Grayscale ETH might close a little more? So that's something to also keep an eye on?
Yeah, they could. Certainly, I think if they don't decide to appeal, I'd expect that discount to narrow somewhat. If they do appeal, it makes sense to see that discount widen.
Yep.
It's very much will depend on what happens during these few days in October.
Yeah, all eyes on the on your Bloomberg terminal or whatever terminal that you're using for your news. That's great, Greg. Thank you very much for that. Sid, would love to move to Web3. What's been keeping you busy this week?
Yeah, a couple of big pieces of news. One is Eigenlayer, which is a project that launched this summer, which is the main purpose of the project is this notion known as new restaking, where there's staked ether and they try to use that staked ether to power other protocol use cases. They recently announced the launch of their data availability solution called EigenDA. And what is data availability for folks that aren't aware? Basically, it's a kind of mechanism to store on-chain data effectively and kind of split the data storage and then the transaction processing layers separately. That's kind of the roadmap, the long-term strategic roadmap for Ethereum to evolve. And so EigenDA is one such product where the goal is for them to use the staked ETH that's already in Eigenlayer to power this data availability layer. And it's pretty promising in the sense that the main benefit of these data availability layers is that it allows for layer 2s like Arbitrum, Optimism, Base, etc., to have much cheaper transaction costs because they don't have to post all of that data onto the layer 1 Ethereum blockchain, which costs money because data storage on the main chain does cost money. They'll be able to utilize services like these, which will be much more cheaper.
Interesting. And I guess just to refresh people's memories, because we've spoken about this a little bit, what are some of the risks of Eigenlayer, and are there any specific risks to the data availability layer that they're launching soon, or is that more just around restaking more generally?
It's kind of more around restaking generally, but also around the data availability layer. Basically, they need to have a pretty decentralized set of validators that will be storing this data, validators, nodes, etc. Similar kind of concept where the data will actually be stored, make sure it's kept resilient, make sure there's failovers, etc. So data loss doesn't happen. That'll be pretty catastrophic. And it's effectively, they're kind of building a layer 2 for data storage, right? Holding that data off chain in a sense in this kind of layer, separate layer, allowing transaction processing to be much cheaper.
Interesting. Okay, cool. Thank you for breaking that down, Sid. What else in DeFi? What's the latest on friend.tech?
Yeah, friend.tech, continues to grow. Generally, TVL hasn't been growing at quite the pace it's been growing at, but for the past few weeks, it stalled a little bit, but the team has been making some updates as well. Folks, there's a lot of chatter on Twitter and on friend.tech itself around the mechanics of the app itself, especially the bonding curve. It's pretty expensive for folks to buy in. It's a kind of microcosm of crypto Twitter and the NFT communities where people are slinging around a few $1,000 in USD terms to buy each other. There's this notion of 3-3, which has come up where if someone buys someone, they're expected to buy them back. And so this expectation kind of naturally spurs people to deposit more and more ETH to the platform to buy folks that are buying them back, right? So we'll see how this phenomenon develops. There have been a few kind of larger accounts that have joined, a few popular DJs and electronic music producers, and we'll see if it attracts more mainstream attention as well.
Interesting. I guess I would love to focus on like some of the people that aren't in crypto joining. Like, why are they joining? What are they saying?
Yeah, it's interesting. I feel like most of this spreads through word of mouth. We have, some of these like Stevie Aoki and bass jackers and things like that. They've been involved with crypto before, so especially with NFTs, and they've launched their NFT collections, etc. So, some of this, they have some familiarity with crypto, but I have noticed some folks who I haven't really even seen around the crypto scene. I think Matt Walker, he wrote a book called Why We Sleep, really great book. I saw him, I got his key on friend.tech, he's joined. They just say they're recommended by friends, trying it out. It's a new app, see how it works. A lot of folks are offering them suggestions on how to best participate. But of course, for a normal human being who outside of crypto, throwing around these large sums to just even participate is a pretty big hurdle.
Yeah, for sure. And what was the last 3-3 we had? Because I feel like it wasn't Luna, was it? What was it? I feel like it didn't. Olympus maybe it didn't end that well.
Yeah, it didn't end that well. Like basically all the rebase kind of tokens, Ohm and Time and Wonderland, were the kind of classic 3-3s, where folks were just encouraged to hold forever, and they kept rebasing and their wealth would keep increasing. But it didn't end great.
Okay, cool. Let's hope we learned something. Perfect. Awesome. Well, thank you very much for that, Sid. Thank you, Josh, David, Greg as well, on our fantastic production team. That is a wrap. See you next week.